is up, everybody, and welcome back to the Fresh Finance Podcast. My name is Thomas Elms, and I've got my co-host here, as always, Kyle Ryan. Kyle, appreciate you being on the pod again today. Today's conversation is going to be all about normal and reverse budgeting. So we're kind of going to break down who this conversation impacts, why it's important, and how you can actually implement a new reverse budgeting strategy within your own kind of cash flow planning. And to kind of kick off the conversation, Kyle, I'd love to just have you explain, the normal budgeting side of things, what the traditional route is, and how that strategy comes into play, and some of the pitfalls that we might run into on kind of the normal budgeting side of things.
Yeah, and normal budgeting is pretty common. There's a million and one ways to do it. There's a million and one way apps, softwares, paper, Excel sheets. There's a bunch of different ways to do it. So the basic, normal budgeting, if you will, is taking a look at your income. Say you make $6,000 a month or something like that. Usually it's done on a monthly basis or quarterly or in a pay cycle, what have you. But normally you look at your income, say it's $6,000 a month, and you'll break down your expenses, right? Usually it's your fixed expenses first, the ones that you can't go without, whether it's your rent, mortgage, utility payments, phone payments, car payments, et cetera, et cetera. So you take out, your payments and you look at, what's left over. And you say, okay, well, I can allocate $300 to groceries. I can allocate, $500 to my investments for this month. And you kind of just pick and choose where your other money is going to go. Oh, I spent a little too much on grocery or fast food this month. Oh, I got to spend more on groceries and cut back. So the normal budgeting is very well known. We've discussed in past episodes, we've called it expense tracking, just knowing where your money's going and staying on top of it. But normal budgeting, it's very straightforward. It's just making sure you understand where your money's going and trying to keep it within an amount. The pitfalls of that are sometimes your wants and wishes today can supersede what you want and wish for yourself in the future.
100%.
And we're going to get into the advantages of what a reverse budget can do. But, I want, Thomas and I were talking offline about golf. I want a new golf club. Well, it might not fit in my budget, but you know what? I'll just blow off a couple of things and I'll go get that new golf club. But then, we all have this inner piece of us that's going to feel bad. We feel a little guilt. We do want personal gratification today, but we also know what we're sacrificing on the back end, that opportunity cost. So that can be really a pitfall of a normal budget, is that you're going to make sacrifices today that might not behoove you in the future. And you give yourself the ability to do that with a normal budget.
Yeah. And when I kind of break down normal budgeting, I do it in a very similar way for you that you did. Is I'll essentially break down normal budgeting as whatever your monthly take home pay is, minus the fixed expenses, like you talked about, things that are going to be steady and have to get paid every month. And then it's your lifestyle. So any sort of lifestyle expenses. And then it's saving and investing. And to kind of jump into the reverse side of that, is reverse budgeting is really just flip-flopping that conversation to a degree. And what I mean by that is, with reverse budgeting, you are taking that monthly take home pay, and then you're prioritizing your fixed expenses, and then it's saving and investing, and then your lifestyle is spent on the remaining surplus. And that's really where I think a person that is taking a lazy approach to retirement planning or wealth creation will take the normal budgeting side. Somebody who's really trying to be disciplined and really wants to create wealth is going to go ahead and switch over to that reverse budgeting side, because what you're doing inside of your own head is you're prioritizing the saving and investing side over your lifestyle. And normally, especially with younger people, that's a really hard concept to essentially change within your own mindset. And so I think that's why it's a really important topic to walk through, but it's a lot easier said than done, in my opinion. And it's something that I struggle with in my daily life too. I think the biggest thing on the reverse budgeting side is the automation of it all, right? This helps with employer-sponsored retirement plans. So if you're doing a 401k, simple IRA, whatever it may be with your company, they're already taking those savings out of your paycheck before you even get your take-home pay. So that helps. If you're doing any cash saving, automating transfers of money from a checking to a savings account to rebuild that emergency fund, or setting up a vacation fund, and also automating things like Roth IRA contributions, brokerage accounts, whatever it may be. But having that money getting taken out before you have the ability to spend it on your own current lifestyle, I think that's the big kicker when it comes to reverse budgeting.
I think you hit that spot on. Automating is the easiest way to do it. And most people already do this in the sense, like you mentioned, of your 401k or your employer sponsored retirement plan, where it's taken right out of your paycheck before you get to see it. And we
Yep.
said that again in that last episode we did. It's pay yourself first, right? Because otherwise you're going to be left at the end of the month. You're like, do I invest this $500 or do I go get that new shiny thing?
Yeah.
And again, it all goes back to the world we live in. Yet a spade's a spade. We live in a world of personal instant gratification. Sometimes it's hard to ignore it, but by being able to save for your goals first, you're playing the money you have left over, you don't have no guilt or remorse about spending it because it's within your means. You planned on doing it. You've already hit all of your goals. Now go spend the rest. Now, if you have some extra at the end, you want to invest it, great. And you're surpassing your goals. If you go a little under, you know that you have some adjustments here or there to make.
Yeah, 100%. And one of the things I also like to do with the people that I work with is I'll actually break those three segments. So fixed expenses, saving and investing, and lifestyle expenses. I break those three into percentages when we look at their actual monthly take home pay, because I'll even sometimes we'll need to audit, especially if somebody's transitioning from a normal to a reverse budgeting process, is we'll do the percentages to actually audit their fixed expenses as well, because this is an area where you can recognize if somebody is living a more extravagant lifestyle than maybe they expect, at least in relation to their situation and what their future goals are. Because they could be really frugal when it comes to lifestyle expenses, like going out to eat or going to the bars or golfing or doing whatever hobbies they may do. They can be very frugal in that section, but they could also own more home than they can afford. They might have two cars if they're spouses that they technically can't afford, and it affects their ability to save and invest within their plan. And so making an audit of those three categories, I think, are really important when you're breaking down your cash flow plan and trying to figure out if there's any ways that you can make that situation more effective and more efficient in order to get you to your goals quicker.
That exercise would be really valuable too, because it shows you how exposed you are to a loss of income and how big your
Absolutely.
emergency fund
Great
can
point.
be, right?
Yeah.
Because if a very small amount of your monthly expenses are fixed and it's mostly discretionary, then it's a little bit easier. And I say that
Because you can cut back.
it's a little bit easier to cut back. It's not going to be entirely easy. No one wants to spend less than they're accustomed to, but it's easier than saying to your mortgage company, hey guys, sorry, I only have $1,000 of the $2,000 you need this month. Whoops. Like that's not how that, that's not how that flies. You can cut back on a couple of the other monthly memberships.
Yeah. Yeah. 100%. I think that's really important. And, I think that this is a conversation that you and I had offline, but it's the process of building out your vision for what your lifestyle design is what you want that to look like. And then you're kind of aligning that with your own personal values and then building out the reverse budget to actually show you how to get there. And I think that's the process, because over time, your values on money, the expenses or the line items that you're paying for, they're going to change throughout your life. Whether that's from your mid to late 20s to your 30s, your 40s, your 50s, those values and those line items are going to change. But making sure that the saving and investing part stays consistent is really important.
Consistent or grows, right?
Absolutely.
Yeah,
Yeah.
as your goals change, because it's pretty, it's if you're saving, say, $500 a month, you can really, if you just extrapolate that further, give yourself an average rate of return, you set yourself a very reasonable expectation for what you could have in the future.
Yeah.
Versus if you're just saving what's left over, for example, you don't really know how much you might have. It's harder to track. And again, it all goes back to the psychology of it. It is so much easier and it takes so much stress off of your life to make sure that the necessities for not only today, but your future self are taken care of. Then you can spend
Yep.
the rest however you'd like, as again, within a limit. But, it takes a lot of the stress of having to count where every dollar is going off your plate.
Yeah. And I think that part right there is to kind of reiterate on this, but the automation is the key to it all. Is when you're automating that process, especially on the saving and investing side. And I differentiate saving and investing. Some people don't, but I consider investing as any sort of money that's going into an investment account, whether that's retirement or not. And saving is anything that's going into some sort of cash account. So just kind of illustrating my point here. but the automation is going to allow you to do that. And I think it's a technology that a lot of people are starting to utilize, but I think that it can be utilized better, more efficiently, and more frequently, um, to essentially kind of better that person's situation.
I recently used this helping out a client. He said, he was trying to save for a down payment on a house, right? So he wanted to come up with $40,000 on the down payment of a house. So we were originally what he was doing was, yeah, I'm just watching my bank account grow, whatever's left over. Thankfully, I'm not spending as much as I have. That's kind of the normal reverse budgeting. You're just kind of moving it along, however it moves along. And we relooked at it, we did an audit of this financial situation, very similar to what you're saying. We're saying, okay, well, before you go spend money in all these different spaces, why don't you direct 500 extra dollars into the savings account so that we know you reach your goal by year 4, whatever it is, right? So it creates, as opposed to this, oh, one day I'll reach that goal, it just makes it much more manageable to be able to comprehend when you will reach that goal and what it takes to get there quicker.
Yeah. And I think that's a great hat that us financial planners can wear, is adding that value of helping people simplify their saving and investing strategy by even just having a conversation of, hey, let's maybe build out some more bank accounts here. And I do this with people who are W-2 salaried employees. I also do this especially with business owners, is if you're a W-2 salaried employee and you're trying to build out a lifestyle design, depending on your age, you could have anywhere from a normal checking account. That's where you're going to be receiving all your income, paying all your bills. You could have your emergency savings account for your emergency fund. You could have a down payment on a home fund, and you could maybe have a vacation fund, right? And then once that down payment is covered, then maybe you could look at putting together a home repairs or a new car fund. And it's the reality of, if you just add these other accounts that have specific reasons for being open, it's going to allow you to just organize your money in a much simpler format. And, this goes the same with business owners as well. And I know we're getting a little bit off topic here, but it kind of reverts back to this whole reverse budgeting thing, is just being disciplined with it. Is if you're a business owner, or a 1099 employee in general, look at having your normal checking account where income comes in, and then having an owner's pay account, especially if you're an S corporation, having a taxes account so that you have money flowing into a taxes account. So that is then utilized for your quarterly estimated payments.
Yeah.
And then I also say have a retirement plans account. So if you're doing any sort of 401k contributions, profit shares, whatever it may be, but segmenting the money that's coming in and filling up these different accounts so that you don't have to worry about, trying to reclassify all of this stuff all in one account. It's going to simplify and organize the different parts of your life so much more efficiently.
I love that. I think I heard that once termed as mental accounting, where
Yeah.
certain accounts are geared towards specific thing, and
Yeah.
it's a fantastic idea. Again, it all gears back to automation, right? You get paid on
Yeah.
the bi-monthly, whatever it is. That money right before you even can spend it, it's getting sent to various places. It takes all the pressure off of you thinking of overspending.
Yeah. Yeah. 100%. Let's just kind of recap the episode here. So, and this is something that we're trying to do a better job of, as we kind of conclude these episodes, is the conversation that we had today was all centered around the normal and the reverse budgeting side of things. And I know that the budgeting word most people don't like. And we're not saying, hey, you need to track and categorize and organize and scrutinize every single transaction that you ever make for the rest of your life. We're not saying that, right? That's not what we're trying to talk about. We're trying to talk about, let's set some guardrails and some expectations of where money is going when and how often. Because that's the ultimate key to disciplined saving and investing and wealth creation. That's really the concrete foundation of it all, is starting to be disciplined and putting your money in the right places before you go and spend the rest of it on your lifestyle. And the pitfalls on the normal budgeting side is it puts the saving and investing component of your life on the bottom of the totem pole. And I think that's something that somebody who's trying to create wealth should not do. And we kind of walked through a lot of different details as to why the budgeting is important and how to actually do that. And the main thing really is find a financial planner so that they can help you walk through it. But secondly is automation, and figuring out those different types of ways that you can clear up and simplify the cash flow part of your life.
Yeah, it's 2023, automation, use it. It's your friend. And, last thing I would say, Thomas, I think you really recapped that really well, is pay yourself first. Future you will thank you.
Yeah, 100%. Well, thank you everybody that's watching, listening, doing a little bit of both. Really appreciate your time. If anybody has questions on the normal versus reverse budgeting strategy, please reach out to us. Our contact info is here on LinkedIn or here on YouTube if you're watching. So feel free to reach out. If you have any topics that you guys would like us to talk about, feel free and shoot us a DM or an email. We're happy to include those. We always are open to suggestions on things that you guys have questions on. So really appreciate you watching, listening, do a little bit of both, and we'll see you next week.